Hello, and welcome to Pro Trader Strategies Market Commentary for Wednesday, September the 21st. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters, I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. We had the DOE, which is the Department of Energy's weekly release of crude oil inventories, and it was a drawdown of 6.2 million barrels versus the expected build of 3.2 million barrels. If you remember last week, we talked about how there was disruption in supply due to some of the hurricanes. It's kind of hard to tell whether or not some of that stuff has been making it into the overall markets, but it doesn't look like it because we're having still increase in production. Russia's pumping out as much as they can right now, and the rest of the Middle East is continuing to increase production, but we're still not seeing that increased build across the board. So it's kind of hard to tell whether or not what's going on there. So it's a little bit ambiguous at this point. But if you look at the breakdown, we got the crude oil inventories drawdown, like I talked about, 6.2 million barrels. Cushing, though, was a build of 536,000 barrels, and gasoline was a drawdown of 1.4 million barrels. Distillates also rose quite dramatically across the board. So that was the one that is like heating oil and things of that nature. So that also goes into the production side. So that being a build means that manufacturers are not using that much oil at this point in time, which could indicate more of a pullback in the manufacturing side. So we'll have to see how those filter into the overall data points. Onto the overall markets, we got crude oil up over $1 right now and above that fib line that I've been talking about. It's been acting as resistance, but today, actually last night with the API number, which is the precursor to the Department of Energy's release, that's the one that's more widely looked at, caused it to pop above that fib level and now right there at the point of control, which is where the most time and volume has been spent over the last year. Gold right now, gold pushing higher by $12, really getting back above this line in the sand that I've been talking about of the 50-day moving average, pushing above there, probably because the Fed is expected to not do anything. So that's going to be gold's safe haven, if you will. Then if we look at the bonds right there where I've been talking about, it's going to probably want to hang right there at the point of control going through today's meeting, which is expected to be 2 o'clock Eastern and 1 o'clock Central. So keep your eyes out for that. Then we have a mixed bag here with the overall equities. We got NASDAQ leading the way to the downside, but it's only down about 3 points on the day and getting real comfortable. It's not an inside day, but it sure feels like it. Just not a whole lot of movement going on. This is the E-mini S&Ps. This is what I was talking about. NASDAQ down a couple of points. E-mini S&Ps up a couple of points. Everybody looking forward to this FOMC meeting, so not a whole lot going on. As you can see here with the E-mini S&Ps, we are pushing lower, but not really the lows that we saw overnight, and still higher than the close yesterday. And then that is the E-mini S&Ps. Sorry, I thought I had the I accidentally closed the Dow Jones, so let's just pull that up because the Dow Jones was actually in positive territory when I started. As you can see here, it is up almost 6 points on the day. It is a negative candle. We're lower than where we opened, but still higher on the day from yesterday's close, which was closing right on the lows of the day. Now, I haven't done a whole lot because I'm really happy with my portfolio right now, and heading into this FOMC, I just don't want to start playing around with a whole lot right now. Kind of getting an itchy trigger finger on a couple of things. So we're going to have to see. Follow me on Twitter at Wolfman's blog. You can find out if I'm doing anything. I'll tweet it out later on today. The other thing is Friday's webinar is going to be how to protect your portfolio in a rising interest rate market. So if the Fed does happen to raise rates, this is going to be something that you really need to do to protect some of that value in that part of your portfolio. All right? That's all I got for you today. If you can't take that, take it easy.